most of the crimes, especially in countries like Saudi Arabia and others, the punishment in the UAE is very severe. That's why you see very low crimes in those countries. And there are many, many stories about if you leave your phone or leave whatever things on the side of the road, basically no one will pick it up. Of course, one of the reasons why, because of fear of that punishment. Fiscal punishment basically works. And if you look at the literature, and I'm familiar with literature because I used to teach a course on this long time ago. Um, if you look at
Hi,
the
bro.
literature,
Assalamu alaikum.
basically
How are
they
you
say that
doing? How's
lower
your
crimes happens not
morning? You
only
heading to school,
because of the
probably.
severe
You go
punishment
have fun
or
in
the
school,
capital
okay?
punishment,
Do amazing,
but also
inshallah.
because of the
Have a lovely
probability
day.
of
Go
being
ahead
caught.
and
And that's why policing
be
becomes
the best you can today,
very
inshallah.
important
Love you,
here.
Baba.
And of course, within this, you have to have zero corruption. And that's why you see crimes in certain areas. In those areas, you see that the probability of being caught is very low and corruption is rampant too. To move to energy, a lot of the news today. We have the biggest news coming from the International Energy Agency. The International Energy Agency retreated completely from its views and scenarios, and luckily, everyone is reverting to my forecast. I was the first one in 2020 to do forecast to 2050, and you can see that in the pin tweet where I said that there is no peak or demand based on the forecast, based on my model. At that time, all the agencies around the world and the big banks, their forecasts were to 2045. But I was the only one who went to 2050. Now we've seen that all those organizations basically are going back and saying, now, 5 years later, we've seen the IEA saying, based on the current situation, there is no peak oil demand until 2050. Remember, they are the ones who said 2 years ago that that's it. We are going to have peak fossil fuel, peak oil demand, and that's it. Now we have a complete reversal. This is extremely important on several fronts. Anyway, this reversal, partly because of the Trump pressure. And when we talk about the Trump pressure, let's remember how the IEA operates. The IEA, the International Energy Agency, was formed in the mid 70s to ensure the energy security of the members, and mostly the industrial members that include the United States, Canada, Europe, Japan, South Korea. And during the first term of Trump, because Trump was talking about energy independence, etc., but at the same time, he cut off all relations with most of the international organizations, and he cut the funding. So the IEA was fearful that the US would cut funding to the IEA. So the leadership of the IEA started literally flirting with Trump and looking at what he likes and say exactly what he wanted to hear. So we heard from them statements like explosive growth in shale oil production and US energy independence. So they literally said that. And literally the night of the elections, the moment Trump lost to Biden, few days later, just immediately, we've seen a major switch talking about climate change, we don't need fossil fuel, etc., which was music to Biden's ears. Now the Biden era is over, Trump is back, now they reverse back. So in addition to everything else that we know about the IEA, where they have a bad reputation in forecast and they have bad reputation in terms of flip-flopping, etc., today is another flip. I mean, this is just under pressure. But reality played a role too, because we've seen a major retreat from climate goals around the world, from governments and companies. Even the Norwegian fund, which is the largest in the world, retreated. So now this is the final retreat. That closed the door on ESG and everything else, etc. If you look at the details, this needs like a whole space for 1 hour to talk about it. So I'm going to take just 2 minutes and stop talking about the IEA. One issue, if you go over my tweets today, and I'm going to put some in the net, you will see that major, increase in gas demand. So literally, the message is very clear. If you are not bullish on gas, you are not bullish on LNG, you got to be bullish. This is really the biggest message out of this forecast and what OPEC told us just a couple of months ago too. It's the same thing. And OPEC was way ahead of the IEA in this. You might recall my comments when OPEC said that no peak oil demand and we need $18.2 trillion to meet oil demand by 2050. Today, the IEA is saying the same thing. There are a lot of details. They expect that coal demand will decline substantially. I don't believe it. While I agree, directionally speaking, in terms of oil demand and gas demand, I think they are wrong and way off on coal. As I told you before, I am bullish on coal. So I think coal demand will decline, but not the way they are talking about. The other news is OPEC released its monthly oil report. They did not change their oil demand despite lower prices and everything else, all the problems, all the sanctions, and all these sanctions on lube oil and Rosneft. They kept the demand the same, they kept production the same, and almost everything the same. This is bullish in a way for next year because they are talking about a growth of 1.4 million barrels a day next year. The IEA is saying it's 0.7. So the forecast of OPEC is literally double that of the IEA. And if you look at the history, you look at just the last few months, OPEC was more right on the oil market than the IEA. Our forecast is a growth of 1.1 million. OPEC is 1.4. The IEA is 0.7 or 700,000 barrels a day. So the oil prices declined today simply because we are talking about storage and everything else. I think we'll get the American Petroleum Institute data today and the EIA tomorrow. Probably the prices are reacting to that. We are still getting information and a lot of hype about oil on water. I already debunked this before here, and the issue here is do not panic when you see all these headlines. They are the highest in history or record, etc., on oil and water. The issue of oil and water is we have many reasons why we have higher oil and water, but it does not mean higher supply. Remember that we've been talking about this for 6 weeks, and oil prices are going up. Oil prices are around 65. Oil prices should be about $10 lower if they were right. Back to you.
Thank you for all of that, Anas. Carlo, something on energy?
No, we're going to pivot to some news on crypto and stablecoins if you are ready for that pivot.
I'm going to get ready for that pivot in a second. I just want to go over market performance from yesterday. The Dow blew it out of the water. The NASDAQ, not so much. Essentially, Dow gained close to 600 points on the day. NASDAQ, flat. Bitcoin now up at around 105, ETH 3550, Solana below 160. I think the big mover and the big news yesterday was on CoreWeave. If anyone follows the stock, it is interesting. I heard the CEO speak later in the day. The quarter was great. Revenue up 130 something percent year over year. Their backlog of work is enormous, and they've diversified their customer base massively. So essentially what CoreWeave does is if you own the real estate of a data center, you've built the four walls, laid the concrete, put in the HVAC, put in the electrical, and so on. They then come in with their NVIDIA chips, right? That's the real kicker. That's the sweetener. They come in with their NVIDIA chips, and they will set up and rent to you the towers, the servers, the whatever you want to call those things, right? That get stacked one upon another. Forgive me for my vocabulary lapse. And so one of their customers um, is delayed in construction. And so therefore they are guiding towards a weaker fourth quarter because they're not going to go ahead and do their thing because their customer is late to either laying concrete, putting in electrical, putting in HVAC, putting in cooling, whatever it is. But nevertheless, that contract's still there. That revenue will still eventually come. I think the sell-off in the stock, probably has less to do with that. Maybe that was the trigger, more about concerns around valuation generally in the entire space. And just remember, the one thing that I thought out of the interview was interesting was the fact that all the folks in the space, which aren't that many, right, that are doing this in size, are doing it A, around the world, and B, they're doing it all at the same time. And C, they all use the same resources, right? Best in class service providers, right? There may not be any sort of genius to laying the concrete foundation, maybe there is, or putting up aluminum walls that go into one of these things. But when it comes to the electrical, that's really important. When it comes to HVAC, very important. When it comes to the cooling, even more important. And so everyone's doing this all at once. So the strain on the supply chain is enormous. And so therefore, maybe there will be, other delays that will go on. In any event, if you're a CoreWeave believer long term at this valuation, yesterday's pullback is an ability to add because, frankly, it's not like the revenue is going away; it's just delayed a bit. But there you go. That's the story there. I'll go back to markets in a bit, but Carlo, you go ahead with crypto and stablecoins.
Yeah, so Circle posted earnings report today, and they beat estimates. But despite that, the stock closed down 5% yesterday and is pre-market this morning down almost another 5%, which makes no sense to me. But needless to say, I've got buy orders in. That's not financial advice, but I just think that the street's not catching up to what stablecoins are doing. In the world of stablecoins, some big announcements, and I got to call it out for what it is. We got an announcement that JP Morgan is going live with their deposit token JPM coin for institutional clients via Base, which enables 24/7 settlements. I called this out for what it is, and I've been pretty vocal about this because I've read their white paper. It's not a stable coin. They admit it's not a stable coin, but they seem to think that their digital depository token is better than a stable coin because it's based on fractional banking, meaning that the stable coins are backed by fractional banking deposit model and FDIC insured, which goes back to the original problem that we had with fractional banking, which is banks don't hold money and need the Fed to bail them out in the event of a bank run. And stablecoins under the Genius Act solved for this because they got to be pegged one for one. So while it's nice to see innovation, I got to call it what it is. Other big development is Visa is now launching a pilot program to let businesses be paid in stablecoins as opposed to fiat on credit card transactions, which again is nice innovation to see, but let's call it out for what it is. We're going to get to the point soon where businesses are going to be able to collect payments directly from consumers via stablecoins, and they're going to be left with the choice: do I get 100% of the stablecoin payment from the consumer, or do I get the stablecoin payment from the Visa provider less the 3 to 5% processing fee that gets extracted? So essentially, credit cards are left with really one use case at the end of the day, and that's float for consumers at 25% interest. Last thing, I have to do a little bit of a victory lap. I put out some content yesterday about how frustrating it is to process a wire at a bank, and it got some good traction. But I got a notification that it was shared in an Oxford class. Apparently, Oxford's business school has a class on fintech, stablecoins, and digital assets. And I got a post from one of the students in the program saying that my video made the case perfectly on the subject that they were discussing about SWIFT and stablecoins. So guess what, Ma? I got talked about at Oxford. So back to you, David. That was pretty fun news for me.
You should get some merch, share it with your mom. But On the point of Visa, MasterCard also, Visa, MasterCard apparently are close to settling their disputes with merchants. Remember, this is a long-standing litigation that a judge knocked down even after they had a settlement. Now they're going to let merchants choose to go ahead and opt out of certain premium cards. What this means, how merchants go ahead and slice and dice, or you know, figure out which ones they do want to take, that don't want to take, based on the fees associated with it, how much the merchant is getting charged. Discriminate, that was the word I was looking for. I don't know, we'll have to wait and see, but I guess giving merchants more choice to go ahead and discriminate, rather than imposition by Visa and MasterCard, will go ahead and hopefully clear this up, and will allow the industry to move on. And by the way, the industry has changed radically since this litigation started, and will change even more radically because of the fact that, with the advent of stablecoins, Visa and MasterCard are not going to continue to have the chokehold that they do on transactional activity with merchants. But we'll see how this all develops, but they're definitely coming under additional pressure. But I will say, Carlo, to go back to your point, Visa and MasterCard were early adopters of crypto, embracing it, moving with it. Big banks took the position of, we have to fight against it. You can only keep up that fight for so long. I mean, I think banks have gotten a lot further than they would if not for the size and influence of JP Morgan Chase. Because without JP Morgan Chase, I think they get bulldozed a bit in this. But it's going to take longer with Jamie Dimon at the front of the pack, fighting for everybody in the traditional banking sector. All right, North Star, over to you, sir.
Yeah, hey everybody. I'm not too far from Oxford myself at the moment. Perhaps I should have been there listening to that lecture.
Pick me up a hoodie.
Sorry, I beg your pardon?
Pick me up a hoodie while you're there.
I'll pop across and do that. Yeah, I think a lot of people listening to this are probably going to hate me for what I'm about to say, but just try and have an open mind. A year or so ago, and I keep saying this, I put a pinned tweet on X there, and the pinned tweet is trying to get across the idea of capital rotation. It was very clear a couple of years ago, 18 months ago, that capital rotation process was getting underway. Capital rotation being defined by a proportionate move between stock markets and precious metals. That matters because it happens on a cyclical basis, and it ushers in a whole series of events. Now, since, and I said at the time that cryptocurrencies and Bitcoin, a year ago I said that they were going to struggle to outperform gold during 2025. You don't need me to tell you that gold and silver have massively outperformed Bitcoin since then. And in fact, since cryptocurrencies peaked 4 years ago, they are down a very long way priced in gold. Bitcoin's down 40% now, and is in a technical bear market priced in gold. So there is an element of the dollar illusion going on here when we're looking at price charts. When we know that gold is in a bull market or a bull era, we should really price everything in gold just to get a full picture. But to just give you some facts, and for the haters, this can change. So I'm not saying that this is fixed and can't change. I'm not saying that cryptocurrencies and Bitcoin can't turn it around. But what I'm going to say is 100% true as we stand at the moment. Gold has broken out versus the S&P 500. We need a monthly confirmation for that, but the S&P 500 making a breakdown below major support and entering a technical bear market priced in gold is kind of the final sort of confirmation that we require to confirm this entire process that we've been talking about. All of the other evidence has sort of fallen into place. Bitcoin itself has or is in a process, or perhaps I should say, breaking down versus the S&P at the moment. So if you pull up a ratio chart of Bitcoin versus the S&P, that is looking decidedly unhealthy at the moment. But as I said, it still has time to turn itself around. Bitcoin priced in gold is in a bear market. So, it is in a clear bear market priced in gold. And in terms of performance, since that peak 4 years ago when the crypto cycle peaked back in 2021, since that point, gold is up 132%, which is roughly double Bitcoin's gains, even though Bitcoin has been in the bull market for 2 to 3 years. So despite its recent bull run, Bitcoin has nowhere near caught up with gold from that peak 4 years ago. And my thesis that I'm trying to put in front of people is that is because of the capital rotation process that's taking place. Bitcoin has underperformed gold and silver because of that capital rotation process, because gold and silver are in a period where they can outperform very strongly stock markets, and cryptocurrencies need to decide whether they're going to join gold and silver in that outperformance, or whether they're going to continue, as they are doing to this day, to mirror the performance of the stock markets priced in gold. Crypto total market cap is breaking into a bear market versus gold at the moment, and interestingly, Bitcoin has broken down again versus the M2 money supply. It's another narrative that keeps coming up, that M2 money supply is going vertical, so Bitcoin's going to do the same. Well, if you price Bitcoin against that M2 money supply, when it breaks down, that's a marker for a Bitcoin bear market, and that is just happening in the last few weeks at the moment. So there are reasons to be very cautious on Bitcoin and the crypto sector, despite all the bullish narratives that we're being sort of bombarded with. And I just worry that, I'm not an expert on this, but I just worry if retail is going to be the exit liquidity for the whales, that the big holders. I don't know what's going on underneath the surface, and I'm not going to pretend to know, but something's not quite right in this sort of part of the Bitcoin and crypto bull cycle, and the absence of an alt season is one sort of red flag, but there are other more sort of important red flags. So it can all change. It can change overnight. I get that. And if Bitcoin gets back above about 109, 110,000, then my views will start to change. As it stands, though, it doesn't look too great for the crypto sector. That's it from me.
All right, let me get to some breaking news before I go some hands. To go back to Carlo, Coinbase announcing this morning it's leaving Delaware and reincorporating in Texas. Again, Coinbase is certainly not a conservative company by any stretch. So yes, we have Tesla, now we have Coinbase. Whether this stops, who knows? This is a big deal for lawyers, for sure. Not in terms of incorporation papers, more in terms of corporate litigation and things of that sort. And then certainly because the other thing it has an effect on is certainly economic development, jobs, and so on going on down in Texas. I think the Texas Stock Exchange is something that is going to be real when it finally launches next year. There is enough big money and big names behind it to want an alternative to the current monopoly. The second thing I want to say is Treasury Secretary Besson is currently speaking. A couple of things. Not surprisingly, the economy was in a great place before the shutdown. Fine, no problem, totally understand that. Second, the economy in Q1 and Q2 is where we'll see real pickup in incomes. No problem, we get that too, always pushing it out there. The third point, substantial quote-unquote tax refunds coming in early 2026. I don't think that that's anything more than the $2,000 that we've already been talking about, but maybe there's more to come. The last point is very important. The White House gets that it did not perform, it being the GOP, did not perform as well as it should have in the election day that just passed because of affordability and kitchen table issues. Fourth point that he made, substantial announcements on prices regarding tariffs for products that we don't grow in the U.S., like coffee and bananas. It starts with coffee and bananas, right? But this is the opening to say, look, if we're not doing this in the United States, we can't do this in the United States. We can't grow coffee and bananas in the United States. We just don't have the climate for it. And so we need this coming from outside, right? And you can imagine that this argument, gets gradations when you get to other products that, yeah, we do it in the United States, but certainly not as much as we need. And so therefore lower tariffs. So maybe the White House is admitting that prices are higher due to tariffs. Maybe it's looking for an off ramp for some tariff imposition, and maybe this is the beginning of that. But again, he said that there will be a substantial announcement coming in the next few days regarding tariff news, highlighted coffee and bananas, but we'll see if there is more. All right, I got to get to Lumi Casanova, who wanted to go ahead and bring up some points on the 50-year mortgage, which we discussed yesterday, and then I'll get to Eladio. Go ahead, Lumi, welcome to the show.
Yeah, thank you. Well, the 50-year mortgage, a lot of people already said a lot of things about it, but no one's really considered the other side of the coin. By introducing a 50-year mortgage, the Treasury products, right? So what happens then is that if you think down the line, if you can move large parts of the American debt to 50, 30 years, it means you're naturally going to inflate it away, right? And you think, so, well, why would any debt holder do that? Well, they already do that with the 30-year. So this is actually a grand move, because not only what we saw in the 1940s to 1970s when the 30-year mortgage was created will most likely happen again with increasing property prices and various other activities, but then also on top of that, you've allowed basically families who potentially are halfway through paying off their mortgage to take out a 50-year, reduce their overall spending, and also survive without giving their house to the bank, right? And this is going to create flexibility in the economy. I really think that this can't be understated enough. The 50-year Treasury will most likely come if the 50-year mortgage comes. And when that does happen, the American stock market will be the most robust and the most flexible it has ever been, in my opinion.
Anyone want to go ahead and react to that? We'll let it stew.
Give that man a trophy. Give that man, I just followed you. Give that man a trophy. Absolutely.
Go ahead, Eladio.
Thank you. This is exactly what this is all about. I'm not saying we aren't at a point where we have to do these things, because I agree with Brandon. We need to come up with solutions. I just don't think, Brandon, the 50-year mortgage is the solution, but that's where we're going to go, because we got ourselves into a fiscal position, and we're going to have to convince the world that, in spite of the fact that we have the largest economy, that all of it, or a lot of it, in the last 10 years was financed through the incestuous buying of our debt by the Federal Reserve, but with a program that turned the balance sheet of the Fed.
The British gentleman as well spoke about rotation of capital, right? And famously, bonds will rotate as well. And so the whole pyramid so it's all moved around into gold, right? But because Basel III happened and gold becomes 100% collateralized, right? With that increase in value and with the coming potential to increase the debt, basically system in all different ways, I would say that this is the most Keynesian I've ever seen our economics in my lifetime. And I practice personally Austrian economics, but understand Keynesian. And this is like, on the Keynesian meter, you're going to push it to 11 if it was a 10 as the maximum.
David, I do have a point going back to something that Carlos said, with your permission.
Yeah, let's go ahead and do that.
And by the way, I agree with you 100%, Lumi, on the fact that we are in a fiscal situation that we've put ourselves in, and we have some pretty smart people behind the scenes. Besson is no fool, but getting back to what Carlos said, Carlo, I'm still trying to, as an old suit from Wall Street, because that's what I am, trying to put my head around crypto and how it will change the world. It's not going away, but I do have some concerns, like Circle. You mentioned that Circle, is down. You don't understand why. Well, the reason it's down is that when it went to 262, it had a $51 billion market cap, and they only have $2 billion in revenues. Palantir had, I believe the day they reported, or the week they reported earnings, a 666 trailing PE. But it is a PE, meaning that they actually have profits. In the case of Circle, it has a negative PE. Now, negative PEs can be investable at times, but you know where I'm going with this. There is a difference between the crypto world and stocks that are still stocks. And the one thing you learn from day one when you take, when you know anything about investments is that stocks are inefficient. Stocks don't price fundamentals at any given point in any exactness. I always say the only time valuations matter is at the end of cycles or at the beginning of cycles. So I see that the idea that, oh, well, why did Circle go down? Well, it went down because it already went from where it was to 260 after the IPO, and it was overvalued. So basically, it's back to where it was when the IPO came out. So there's a difference between deciding if crypto is going to change the world as we know it, which I suggested probably it will in some way, and the place that are in equities, where you still have to look at the fact that you're dealing with an inefficient thing called a stock, which tries to price in the reality of something at some point. The problem is we're so busy pricing in the next 5 to 10 years, we've forgotten all semblance of connection with the actual underlying company itself and its fundamentals.
If I could respond to that, I'm sorry.
No, go ahead.
Yeah, I understand, and Circle is pretty much down to its IPO point, and that raises an interesting dilemma for people who are looking at the stock. Is it a bargain there, or is it going to continue? Because it does have, obviously, the pressures that you're talking about. However, we're still looking at the potential for Tether and Circle to be the largest buyers of U.S. Treasuries in the world once Genius Act compliant stablecoins go live. And that type of demand, and Scott Bessent has projected $3 trillion in Treasury demand on the back of stablecoins globally, which ties into the broader conversation about the dollar and the U.S. economy maintaining global dominance as the reserve currency. I think stablecoins are that pathway, and I've maintained this several times that I think it's a Hail Mary pass by the Fed to continue to bolster demand for treasuries and make stablecoin issuers essentially the buyer of last resort. Now, that's great if people want dollars, and if people are looking for an easy way to on-ramp dollars, stablecoins is an obvious play. So Circle is building in the United States the largest, most compliant Genius Act compliant stablecoin issuer. They have their relationship with Coinbase, and they have huge network adoption. So their entire business model is premised on earning yield off those treasuries, and the yield off those treasuries is tethered one-to-one to the issuance of stablecoins. So if we see an explosion in the issuance of stablecoins across all brands, across fintech, and if stablecoins do replace traditional banking rails, then I think there is a potential upside for Circle, as long as they can, number one, extract revenue from their treasury yields, because they're the ones who get to earn treasury yield off of the stablecoin backing, and if they can come up with innovative ways to integrate stablecoins into commerce. They've launched their own blockchain, and there's reports that they're talking about taking their own token ARC and making that live. So they do have revenue opportunities, and I think there is growth in that sector, but I completely agree. The stock market only looks
to be that person, to have the discipline to on some days be a very long-term holder and use the vision to buy at the lows and hold for a long period of time. And then when momentum is working against you, even if you have long-term conviction, to go ahead and dump. It's hard. It's hard to be both those people that on the one hand, you're a long-term buyer, but at the same time, you want to go ahead and trade around it. Usually people fall into one bucket or the other. But I do want to, breaking news that the House will vote tonight at 7 p.m. to end the government shutdown. I wanted to also respond to an inquiry regarding SoFi. So SoFi is the first federally chartered bank that is going to offer crypto trading. Now, SoFi is not your traditional bank. It's got no branches. It's large. It's roughly the size of a regional bank, Commerce Bank, United Bank. It's got 36 billion assets, about 10 million customers. About an eighth, I'd say, or so the size, or 10th the size of JP Morgan, depending on how you're measuring it. And certainly, for SoFi to be an early adopter makes a lot of sense. Certainly its customer base, which is largely, made up of folks that originally started with SoFi because they offered refinancing of student loans and then stuck with them. That's where they started their business, and then started with all sorts of other consumer-related credit products. It makes sense that their customer base actually would like to, if doesn't already, trade crypto, invest in crypto. And maybe it's easier for those folks to say, hey, I've got a bunch of other assets that I have with SoFi, assets, debits, credits. Why don't I go ahead and put my crypto there as well, or have some crypto there in addition to my Robinhood account or wherever else they may go ahead and trade. It's a big move in the sense that finally we have a large bank, sizable federal charter, and now going into the crypto sector. I think it's just the beginning of what eventually will be, widely, held across banking. They have no choice but to allow, to figure it out. I mean, it doesn't cost anything. It adds assets, and if you're at a disadvantage and you're not offering this versus others, frankly, you're putting yourself in a risk position. Joe Carloseri, great to see you this morning. Always a pleasure to have you. Your thoughts on this or any of the other crypto news that was covered by Carlo?
A lot of stuff to talk about. I just wanted to talk about the breaking story. That's why I actually came in here, which I don't know if you covered it already. David, I would love to get your impression of this, and also Carlo and anyone else about this announcement from Coinbase this morning that they intend to move out of Delaware following Tesla's suit. Did you cover that discussion? If so, we can move on.
I mentioned the headline in passing, but didn't drill deep. If you want to go ahead and talk about it, please go ahead. The floor is yours.
Yeah. So the quote, the one that stuck there is that Delaware's legal framework once provided companies with consistency, no more. And I think they talk about it being a broader issue than just Coinbase. And obviously, people like Musk and others have been very vocal about this. If this continues as a trend, it has massive implications, both economically and politically even. I think across the country, if you have more companies moving to more favorable jurisdictions such as Texas, the economic implications of that cannot be overstated. I mean, it's part and parcel of my world. Obviously, people are very familiar with the Delaware Chancery Courts and the economic impact that's going to have if they continue to lose market control of sort of where the preferred place of incorporation is. So, I mean, to me, it's a massive news story, and I'm curious if anybody else has any impressions of it.
Yeah, so I'll jump in there from experience. So a lot of what goes on in Delaware in terms of litigation in those courts, yes, there are local attorneys that need to be hired many times, almost all the time. Uh, but the engine behind those lawsuits often comes from very high profile, very large firms based in New York. And so economically, this is a big deal, right? Because in Texas, you don't have the same issue of the way Delaware is a satellite of New York. Texas has got its own big law firm presence. They don't need help from another state. And the firms that are already there already have very strong presence, beachhead, infrastructure. If you're not playing in Texas already, you're not going to find room to play in Texas. If you're a New York firm and now your corporate client is not incorporated in Delaware, but is incorporated in Texas, and lo and behold, I'm going to find a way to build business in Texas. Oh no, there is enough good legal practice in Texas. The second part of it is, yes, Texas, and you've got, it's not, in Delaware, it's just Delaware. It's Wilmington. That's it. In Texas, you've got Houston, you've got Dallas, you've got Austin, you've got San Antonio. Like, you've got a lot of spots down there. And all formidable courts, right? They've got, I think it's four, maybe 3 or 4 districts federally inside of Texas. And being a bankruptcy guy, right? So you usually file for bankruptcy in your place of incorporation, or if you want, in your place where you've got some engineer abdirman contact, but you prefer that court because.
Adrian.
It comes with a little bit of concern because there may not be as developed a precedent in Texas courts as there is in Delaware, but I can tell you it will catch up quickly in Texas. And so for Delaware and everything that goes on in Delaware, and for New York, which may be more important than Delaware, this may be a real threat. And by the way, never, ever, ever has corporate incorporation been such a partisan issue. This is also a very partisan issue, right? I'm going to a red state consciously. That's why I'm there. I'm there for so many economic reasons. I'm there for legal reasons. I'm there for, a bunch of partisan issues. And to me, that speaks a lot to the sign of the times. You'd never think corporate incorporation would be partisan, but it now seems to be. All right, Carlo.
Oh, go ahead. Just one comment. As someone who is licensed to practice law in the state of Texas, I will tell you, it's not the type of thing where you can easily transfer your business, right? If you're a New York litigator and you're someone who has established that, even if you get credentials, even if you're allowed to just practice down there, you come in looking like you're an invader from the north, and it can be challenging from a litigation perspective. It has massive implications for New York firms, right? That have set up shop and have their existing business line potentially threatened by these moves. And if this continues, if this is a more of a beginning of a trend, New York litigation is going to have some challenges. So we'll go to Carlo.
Just add in a quick point, super quick, Carlos.
Go ahead, Brandon.
Yeah, so I just wanted to say that it's interesting because I'm seeing maybe the downstream impact of it where startup founders are now questioning where they need to, register their business. And so maybe long term, we are actually seeing a shift happen here if startup founders are already questioning where they're going to incorporate from day one, or those that have done so within the last year or so are thinking about switching. So I think there's something long term that's happening here.
Yeah, that is a huge point, by the way, a huge point that we did not mention, and thank you for shining a spotlight on it. Certainly, people that come from red-leaning states will incorporate in Texas. Certainly, people from Texas will incorporate in Texas. And that'll be big for the next wave or the next generation of corporations that will not incorporate in Delaware, will incorporate elsewhere. Carlo, go ahead.
Yeah, look, I have to echo what Joe said because as a lawyer licensed and practicing in Texas, number one, this is a trend that's already been in place. Crypto.com relocated their U.S. headquarters to Tyler, Texas, which is my backyard, and that probably had a lot to do with the things we've been talking about. But also, there's precedent for this in Texas because when it comes to IP cases, most people don't know this, but Marshall, Texas, in the Eastern District of Texas, is the home of some of the biggest IP litigation cases in the country, and that's because that court decided to lead on IP by creating a fast track to get those cases to trial, which was very appealing for companies like that. So what ended up happening, like Joe said, is you had a cottage industry of local lawyers in and around East Texas who were brought in as local counsel because these California law firms and these California companies in the IP and tech sector could not communicate to East Texas juries, and East Texas juries are great, and this is an opportunity for them to get a real advantage by bringing in good local lawyers who know how to speak East Texas and know how to communicate to those juries. And I know lots of lawyers who have made a tremendous living just being those local attorneys. So I can totally see why Coinbase would make this move for several reasons, including a more advantageous venue. So it all adds up to me.
By the way, we also need to point out that Paul Graywall of Coinbase, general counsel of the firm, is an outspoken guy.
And
right? He's been through hell, right? Let's put it lightly that he's been through hell with the SEC and the entire Biden administration. He fought the whole way. The guy's angry as hell. He is, an outspoken cat for sure. He's definitely not your run-of-the-mill, general counsel. So the fact that he's doing this as the first person, a little like Elon Musk, makes a lot of sense. The real question is how many people go ahead and follow
and in
along.
a public way, David. It's almost like you go writing this op-ed, trying to encourage others to come along suit. That's not something a lot of lawyers will do, right? They're more focused on their narrow company and interest. That sends a profound statement.
Yeah, he's a very, like I said, he's an outspoken guy. If you're connected with him or you follow him on LinkedIn, the guy posts constantly. He is not watching his words. I mean, he's a thoughtful guy, great writer, but at the end of the day, he's not concerned that he's going to get called into the CEO's office and get read the Riot Act. He is not. He's been given full license to do what's right on a lot of levels for the company.
And he's
Matthew,
really
go ahead.
a jurist and a former federal judge. I mean, he's a solid guy.
Yeah, no, absolutely. And a good friend of mine actually now works for him. Left Deutsche Bank to go work for him in the general counsel's office. Very high up guy. All right, Matthew, go ahead.
Morning, everybody. Thanks, David. Just a quick iteration here on the Coinbase news, JP Morgan, and with SoFi. I think it's important for people from an investment case to consider the fear and defensive posture that these current institutions, legacy institutions, are taking with respect to the adoption of these technologies. Like, they don't really have a choice anymore but to A, allow for crypto trading, or B, start engaging with stable coins. Like, there's just not an option to do this. And the irony of it all is it's not so that they can go build better and newer products. It's so that they can capture the last remaining vestiges of fees on transactions, which over the next few years will all dwindle to zero. Basically, costless, feeless transactions between any and all parties. And they see the writing on the wall that this is going to be a thing that they used to be able to generate millions and billions of dollars on in the past, and they are not going to be able to extract those fees in the same magnitude that they did previously. And that is terrifying to these businesses. And the other thing regarding SoFi is really that they may be the first federally chartered depository institution that allows for crypto trading, but Anchorage Digital has been around for a number of years, and they are an OCC federally chartered bank as well. So again, the writing is on the wall with these institutions to say we don't have a choice but to start participating in this stuff, And when you look at something like Circle or SoFi or JP Morgan, as I said previously, this is a huge defensive maneuver to capture the profit that they've had previously. And it's not an investment case that they're going to all of a sudden be able to scale these efforts and generate millions and billions of more dollars because of this technological efficiency. If anything, it's going to zero. And you need to be thinking about that from an investment case of why at all you would even think that these can generate meaningful revenue. As David was pointing out previously, you know, when you look at the chart, you have to kind of consider the moves that these stocks have to make in order to, you know, make investors whole again. Back to you, David.
Awesome. Thank you for those comments. Eladio, go ahead.
Well, wow, a lot of great points being made. First of all, I'm going to make this short. Elon Musk, Elizabeth Warren, the Delaware judge, and our president, who was from Delaware, and the result of an election. That is why everybody's leaving Delaware and going to Texas and Florida. And Mamdani will win the award in Florida for best real estate, agent in the country for sure. But I want to get back to two major points which are really important. First of all, let's talk about what happened in 2024 in the election. Crypto took off because the Democrats made the horrible mistake with Gary Gensler of being anti-crypto. My fear is that you're going to see more of a bifurcation politically as though the side that absolutely detests Trump and they adopt crypto even more. The question is, will there be an unhingement of that left's resistance for crypto where they will eventually give in? It's very interesting, but one thing to point, the reason crypto has gone sideways for 11 months, and that to me is a correction, is that like LNG, which spiked completely going into that election, with the anticipation that we would have a pro-crypto and a deregulation of the industry, which is what we're seeing. A lot of people don't understand that first move was massive. It's a stochastic move. You want to get into something as early as possible, and that was a big departure where crypto actually became an asset that even as Matthew said, the institutions are scrambling because they see where this is going. So I concur with what Matthew said. But I have to state, to ignore the parabolic move that LNG and crypto had, and the only difference between LNG and crypto is that LNG completely lost the whole rally. Completely, it's gone. Where crypto's just struggling to maintain that rally. And I can't tell you how important it is to understand much of that move to 100,000 was just the fact that we would finally have a government that was pro-crypto as opposed to anti-crypto. And we might be here for a lot longer before we see that 200,000 that Thomas Lee keeps talking about. So, I just wanted to point that out because we're not going to get another change here unless we go backwards in crypto, where we're going to take back all these lack of regulations and implement them again if God forbid the other side that's anti-crypto gets in the White House again.
Hey, a lot of Bitcoin did give it all back. It almost gave all of it back.
It did. You're right.
We went to $70,000, which was just $5,000-10,000 above where we were before the election.
Well, it did, and that's why I believe it's in a correction phase. It is.
Yeah, but it rallied back over 100,000. It rallied to a new all-time high earlier this year. So I agree with the sideways consolidation. It's not been, exceptionally bullish this year, but that's just digesting a massive move, and that should make you bullish and optimistic on the space, not negative. I view that as very constructive. I don't know why holding 100K for the better part of a year doesn't have you very excited about.
Well, it's the opportunity cost, Joe, because of everything else in the stock market.
That's fast money. That's chasing whatever's shiny and moving. That's momentum trading.
3 year. Wait a minute. A 9-year rally in semis from 2016 when shale oil lost the leadership and it went to technology is not a rally that just takes a year. I mean, and especially in the last 12 months, obviously you're right. I mean, we're in a correction phase. It is a positive that it has gone sideways. I'm going to give that point for sure. That is a positive.
Anas, Texas, my friend, your turn.
Yes, I just would like to add to the Texas discussion that Chevron, as you know, one of the largest oil companies in the world, have decided to build an AI center in West Texas. This is extremely important on several levels. One of the reasons why is going to be powered by natural gas. And natural gas in West Texas is not only available, it is very cheap. And for Chevron to make this move, watch other companies doing the same. West Texas is going to be a big center for AI simply because of the cheap gas. How cheap is the gas? Listen to this. Sometimes it's sold at negative prices. Remember they told us in Econ 101 there are no negative price. Yes, there is negative price for natural gas in West Texas. So I think AI companies and others, many others, will move to Texas after this decision. A side point, the audience of this group were the first one to hear, before anyone else, 2 weeks ago, that OPEC Plus supply declined in October, and therefore that bearish sentiment has no legs. Well, we got the confirmation today. We've seen a decline in production by 79,000 barrels a day. Back to you.
Can I?
Excellent.
Yeah,
Honest.
Brandon, this is so interesting that you say that, Honest. I spent some time in West Texas, years and years ago, cleaning carpets and stuff. And there is absolutely nothing in West Texas. I mean, there's nothing there. So the fact that you're saying we could see AI data centers going there or AI companies moving there is really interesting, and that may be a market that a lot of people want to keep an eye on if we're talking about making money, which this show does, and everybody should tune in every morning, 8 a.m. Eastern. But that could almost do what the steel industry did for Pittsburgh, however many years ago. And it had to be at least 15
All
years
right,
ago.
boss.
Oh man, it changed a lot.
Still, I'm going to assume still desert and a few gas stations.
No, man. You got to go back for a couple of days.
Let's meet there for lunch.
All right, folks. I think we did good today. We will go ahead and reconvene tomorrow morning at 8 a.m. I'm wishing everybody an excellent day in the markets. Thank you very much for the robust conversation. All the speakers, incredibly valuable, regulars and guests. Folks in the audience, please follow them. They are outstanding, as you can see or hear. And we will see you all tomorrow. Thank you very much and take care.
How was it? Oh, you haven't tested yet. Floyd.
No, I haven't. What you doing, Rocco? Were you looking outside? What's wrong, Rocco? Rocco.
What is Rocco doing today? Is he being notorious?
No, he's up here. He's waiting for me to put him in the bedroom.
Oh. He's just being so sweet, huh?
$147.
Oh, good. Not bad, huh? That's good, right?
Mm-hmm.
At least it's not under 100. Good job, buddy. Who left that food in there? Was that your food or was that Katie's?
Where?
There was food sitting on your table.
Right here?
Yeah. Oh, you put it inside already? Not that one. I thought I saw something that needed freezer, and I was like, huh, maybe we'll go back. Not those, Floyd.
What?
I wasn't talking about those. I was talking about a container that had some meat, food in it, and I was like, maybe it needed to be.
Oh, yeah, that one?
Yeah.
That needs to be thrown out.
Okay. Yeah, I saw early, and I was like, huh, maybe it needed a fridge or something.
You ready now? I know, but I have to leave, honey.
Mm-hmm.
I have to go and get my license today. And then I got another doctor's appointment. No, I just gotta go to the eye doctor and pay for those. Don't I? Come on. Come on. Come on. Come on. Come here, you fat slob.
Yeah.